high level of confidence. First and foremost, fiscal, which is now been projected at 4.4%. It's my view is a bold step, especially at a time where the booster is being given for improving the consumption in the country by way of tax cut. And second, the capex continues to remain similar kind of budget, which essentially means making the fiscal at 4.4%. It also shows the confidence of the government in terms of the steps that they have been taking for improving the tax to GDP ratio. This is something is definitely give them a edge over them. And second is, my belief is the agriculture sector is one of the largest sectors in the Indian economy, and giving significant emphasis on agriculture sector, both from the point of view of increasing the farm output, and also the building the skill development that is most needed for people to pursue their career in the agriculture sectors. Given the fact the next 4 or 5 years, agriculture sectors can be good turnaround sectors. Also providing employment through the tourism sectors, giving emphasis that they are given on tourism, which also can provide to large pool of people who are in need of jobs. So that's also something I see as a big positive.
Right, sir.
And the last but not the least is, I think the bringing in some kind of high level of focus on bringing consumption-led booster that should come from the economy. That finally is being recognized itself. My own belief is it's a good move from the finance minister.
Okay, let's get Saurabh into the conversation. This 1 lakh crore benefit that taxpayers have got via the rising of the tax slab. Saurabh, in terms of sectors, would Marcellus have a view on how it changes the dynamics of the food space? Look at Zomato, look at Swiggy, look at how SBI card is moving up, look at Trent. How do you react to this development in terms of more money coming into the hands of the consumer and probably that getting reflected in the markets?
I think that there's 3 ways to look at this tax cut, right? Firstly is bilkul basic consumption, right? FMCG volume growth has been 2-3% now for several quarters running. I think 4-5-6 quarter ho gaya hai. If you put 80,000 rupees extra in the hand of pretty much every taxpayer, I'm pretty sure a few more packets of biscuits, toothpaste and soap will sell. I think the FMCG volume growth gets an uptick. I think that's a simple one. Secondly, if you move to slightly bigger ticket items, quick commerce, food delivery, I think similar, there will be benefits. Given the elevated valuations of the QCOM stocks, I'm not so sure how easy it is to translate this into share price action. I think the QCOM stocks probably are benefiting more from the announcement that gig workers will be included in PM Jan Arogya rather than the tax cut per se. Third is we come to sort of consumer discretionary, jisko bolte hain, right? So apparel benefits, Trent is a big part of our portfolios. We are happy to see Trent do well. But I think one level higher is, I think perhaps even more meaningful. I think auto will get a benefit. Remember, small entry level cars, right? Bhargava Sava Maruti has been saying for several quarters now, the entry level cars, 10 lakh ke niche gaadiyan have been struggling. I think that will get a fillip, and so will two-wheelers, right? And we've been long-standing shareholders of Eicher, so two-wheelers will get a fillip, as will entry-level cars. We don't own Maruti, but it's easy to understand why Maruti will be a significant beneficiary here, right? So FMCG में Tata Consumer हमारे portfolio में है, consumer discretionary में we have Trent as a play on that, and then slightly upwards Eicher Motors, both as a play on the two-wheeler space reviving, and also as tractors. Tractor demand was already pretty healthy, but the pro-farming aspects of the budget, the oil seed mission, the pulses piece, the irrigation facilities that the FM spoke about, should also help the farming sector. So overall, I think consumption and non-urban consumption, including non-urban consumption, should get a nice fillip. And the post-COVID ravages that we had seen, in small ticket consumption and in non-urban consumption, I think those gradually fade away. Those nasty memories fade away, and we go back to where we were in 2018, 2019.
One thing that also needs to be more, put into perspective is brown goods makers. Look at Blue Star, look at Voltas, look at Whirlpool. That is also look at Havells. This is also a space which has come up because of this tax cut, and that is something that needs to be also appreciated. Bala sir, coming to you, A rate cut later this week, later next week?
Some of this is the monetary policy. From RBI point of view, definitely they will watch out on how well we are putting a roadmap on FRBM Act and fiscal consolidation. Definitely is the budgetary provisions and projecting 4.4% would be big comfort, would provide big comfort to RBI monetary policy. And second is broadly what is being budgetary provisions are not inflationary in nature, but at least will bring back the growth momentum, which otherwise was missing. And so that is being the case, RBI monetary policy, which is on 7th of February. There's a high probability they will not only, of course, ease the liquidity, which is the most need of the hour currently. They may also consider a rate cut, which in my own personal belief is, I'll not be surprised if they go for a 50 basis point rate cut, given the fact that I think the next 2 years of roadmap, both on fiscal consolidation as well as the large debt to GDP kind of numbers which the government of India has, the finance ministry has put, all of them should give enough comfort to monetary policy authorities, wherein the government borrowing does not crowd out the private sector borrowing. And given the fact that India needs now growth on credit side come back as they have tightened last few years, I think if it has to come back, then it has to be led by interest rate favorable cut.
Right.
So my gut feeling is 50 basis point rate cut we should expect. One should not rule out, I would say.
Okay. Bala sir has been one of the best bond traders that I have had the pleasure of knowing in the last 25 years. And in the opening comments that Saurabh gave us, he said that we have an opening to a rate cut perhaps later this week, and a journalist likes nothing better than a contrary opinion on his shows. So Bala sir has made a point, and now Saurabh will defend his position.
So look, I think the RBI should be pushing through a rate cut, perhaps not 5th of February, but over the next couple of months. The reason they might do it over the next couple of months rather than 5th February is, I think the pounding of the rupee, they might want some breather to the dollar appreciation and the pounding of the rupee. If Trump throttles off on his tariff threats, I think that gives the RBI the opening to step up and push the rate cut through without jeopardizing the rupee sliding further. But it's very difficult to see how the government can push through this sort of punchy consolidation without the RBI having to play its role in stimulating the economy. And therefore, my reading is in next 2 months, we will see the beginning of the rate cut cycle. Just one caveat here, all the stocks that I'm mentioning, and in a way, this economic position that I'm mentioning is Marcellus' position, and I and my parents are financially invested in all of this.
Yes, absolutely. We understand that what you talk about is the portfolio of the company. Bala sir, one view that I would like to take yours on is this discretionary spending now increasing in the economy. There was this talk of, private consumption slipping below GDP growth. Somewhere to the extent of 2.5%, 3% is the number that we had. You also wear one more hat, which is from the AMFI side. Now tell me, do you see SIPs slowing in the coming months, given the fact that the retailer is now getting a whiff of perhaps not all is well with the markets?
The way I see the SIP is something now is becoming the way of investing. That at least one good thing that happened for the industry is irrespective of what the market conditions, SIP now become quite regular. Therefore, I would assume that SIP's gross subscriptions would continue. But having said that, investors are also smart. Whenever we have seen historically, the 1 and 3 year return gets reduced and goes below the single digit, there is a general tendency for either the SIP to be stopped for temporarily, or they can hold back the SIP incremental investment and come back a little later. I think this is the way generally I see a behavior of investors coming in. But having said that, one bigger trend that I think mutual fund industry is witnessing is the number of investors who now want to get into the market on the basis of the correction. are also equally high. I think if you look at the whole industry, there's only about 5.5 crore unique customers that we have. We still have a long way to go to get to the number of about 15 crores unique customer base, which essentially means that for every one existing investors, you will find one new investors coming in. As long as the trend continues, I think SIP may not disappoint too much in terms of flows continuing in the industry. I think we'll probably see flows coming in, but marginal reductions could happen by way of expiries, cancellation of SIPs. We generally see that trend even today also in the current market volatility, SIP cancellations have gone up. But that doesn't mean that net inflows and SIPs, it gets reduced significantly.
Okay. Saurabh, I'll request you to now take off the economist hat and wear that of a market observer. How do you see the market internals and dynamics over the last 6 days, as also in particular today?
I think my reading is that the FII selling pressure is not going to go away so quickly. This is a good budget. This is a budget that will stimulate economic growth. But the translation of economic growth to earnings growth, the translation of economic growth to Nifty earnings growth will take a few quarters. And given that valuations are elevated, I think there will be more selling pressure on the market in the coming months. So at the overall market level, I would urge those who are watching to be circumspect, to be careful. But as I said, the composition of winners in the market are quite clearly going to change. Given that we will have 2 years of zero growth in government capex, that entire ecosystem of capex and PSU plays and so on, that will be on the retreat. That's roughly 60% of the Indian stock market in different ways is linked to capex plays directly, indirectly. That piece of the retreat. And on the going upward will be consumption and export centric plays.
Okay. So you see, in very simple English, you see money moving away from government PSUs that were capex oriented towards consumers. Am I right?
And I also see money moving away from private sector companies who are catering to government capex, right? So the entire capex related ecosystem, 60% of the market is capex wala ecosystem. Money will move away from that. It'll move into consumption. It'll move into exports, IT services, pharmaceuticals, light industrials, and the entire FMCG, apparel, auto space that we were discussing.
Okay. Bala sir, in your estimate, where will fresh money come into in terms of sectors, in terms of broader industry places?
I think broadly, the money will come into the more like asset allocation fund, with got a mix of equity and fixed income, gold and silver, which is basically multi asset allocation fund. That's where I think incremental money would come. When it comes to the question of market, clearly if you look at the financial sectors have taken 2-3 years of consolidation, and valuations have become relatively at comfortable positions. With the rate cut expectation from RBI may also be more favorable for banking system to get revived. I would assume the banking and financial sectors which is somewhat of benefit. I think consumption-driven companies again have gone through 2.5 years of pain period. We should see some sort of bounce back coming in the sectors. Valuation is again favorable. At any kind of uptick can only lead to the incremental volume growth coming in for them, so they're more favorable. I think sectors like real estate, and equities have been one of the sectors where the government also has given reasonably good push. I think we should see that, as well as hospital sectors, given the fact that tourism, a lot of push is being given. These are some of the sectors, at least you will see earnings expected, the improvement and net growth, I think, would come.
Mr. Bala, Sakshi this side, warm welcome, good afternoon. Good to be speaking to you on the budget day. Although you must have discussed a whole host of aspects, I just want to ask you, how would you rate this budget out of 10? Where does it, come in on the scale?
Interestingly, actually, I rated on a 1 to 10 scale 9. The reason is I gave after the highest ranking I had given. For one simple reason, this is a budget. You are asking for fiscal reductions, it's coming. You're asking for consumption boosted by way of tax credits coming. Capex is not reduced. Government capex continues to remain the same as last year.
Yeah.
And on top of it, debt to GDP number that they are putting for the next 3 years, I think more comforting. I think all in all basis, if you look at it, there are no what you call the numbers which are doubtful for you to actually add the math, whether it will come to about 4.4 or 4.6.
Yeah,
So
yeah, absolutely.
I given a ranking of on a 1 to 10 scale 9.
That's wonderful. Finance minister will be really happy, and so will be the entire team right there. I'm sure for the middle class, this was the top ask. I mean, on the run up to the budget, every time we were asking was like, okay, taxes have to be reduced, middle class burden has to be eased. Do you think enough has been done this time around to make at least those demands pretty happy, those salaried class payers very happy, or still do you think something else would have been done or should have been done?
What has come in the budget is some question of outcome. I think my own belief is next 2 weeks, I think next 1 week they have said that they will release the
Yes.
new income tax code. So as this budget is focused more on ease of doing business, making it more easier for doing a KFC and other stuff they have mentioned about the budget. I would assume even the income tax code when it's being released, you will find some kind of positive surprises by way of various surcharges that's being taxed and so on and so forth, may get revisited. Therefore, it will become more simplified tax structure, which may get released in the IT document they are going to present. I will also not be even surprised. Anything related to the capital market, there has not been any mention about the capital gain tax. There is a high probability capital gain tax related surcharge and other things that may also get revisited in the income tax, the revised note that they are going to present next 1 week time. So I would assume, I think they are doing a lot of stuff outside the budget. With respect to the taxes, which is biggest tax is about GST. I'm sure as the collection starts improving, they'll be able to give enough push through even GST as you move forward the next 1 year or so. So my own belief is the whole the commitment for the government is to actually get back on growth path, as FM has mentioned, as PM also mentioned in his address. Clearly, I think what is most push that's being given is to ensure that our growth is back on track.
All right, Mr. Bala, thank you so much for being with us and sparing your time for us on such an important day. Of course, we'll go through the fine print and get you back very soon to probably look at some more data points as to see how things can go progressing going forward into the new fiscal year. But always a pleasure to speak to you. Thank you so much for your wonderful insights. And clearly, 9 on 10 budget for Mr. A. Balasubramanian right there. So he's very happy with this balanced budget that has come in. Okay, viewers, we already have now new set of panel experts who are joining in to really help you out with their views as far as budget is concerned. We have Mr. Pankaj Pandey, Head of Research, ICICI Direct. Firoz Aziz joins in, Deputy CEO, Anand Rathi Wealth. We have Sanjay Sinha, who will be joining us, Citrus Advisors, and Tahir Badshah also will be joining in shortly. We have Tahir Badshah now, President and CIO at Invesco, who will be with us on the show. And we also have with us Mr. Amarpal Chadha, tax expert, EY India. Warm welcome to all of you, and thank you so much for joining in. Amarpal Chadha, I'm going to be understanding from you. Yours is the most interesting bit as far as the markets and the budget is concerned. This is the time when everybody's top ask was reduce taxes, axe the tax, give some easing of the tax burden as far as the middle class is concerned, salaried class is concerned. That prayer has been answered by the finance minister clearly. How are you looking at the measures that's been announced under the new tax regime? 12.75 lakh rupees of an income with zero tax and new tax slabs that have been announced under the new tax regime. Are you happy with it?
Yeah, absolutely. I think this is one thing which everyone was expecting, but was not sure that it would happen, because small tinkering is something that people have come to expect. But this move to straight 12 lakhs, I think this is being cherished. Till now, it's not sunk in with people, but it's a very big relief that people are getting. And like what you said, with the added standard deduction for people with salary, it goes up to 12.75 lakhs. So benefit ranging from maybe a 30-40,000 if you're above 12 lakhs already, going way up to 1,10,000 direct savings on tax. I think this is a very welcome move. And also the whole concept of trust in the taxpayer, which the finance minister reiterated multiple times, gives us very good indication and a positive flavor to the whole taxpayer experience.
Okay, so we are already playing for all our viewers on the screens. What exactly is the new tax slab for all of you under the new tax regime? All those changes have been mentioned right there. But under this, could you help us understand how have you done the math, including you're saying that over a lakh kind of savings come in tax payments now for investors and for taxpayers who were under the new tax regime already. And there is further incentives for those who were in old tax regime perhaps to recalculate and see whether this one or the revised tax slabs will further add on to some benefits for them. Which is the income band where you believe maximum benefits can be seen now after this new tax slab?
Yeah, so just to understand, see the very basic, the tax at 12 lakhs. So if I would just take an example, if your income was 12 lakhs 75,000, you would earlier pay a tax of 83,000.
Okay.
Now that tax will disappear. And the maximum benefit will come if you are in a higher slab, because you must have noticed that the whole focus was on the middle class. So the maximum benefit actually, if I were to take an income of 23 lakhs or 24 lakhs, at that level, the tax would come down by approximately 1,10,000. So also one more very interesting thing would happen is that now the choice to go to old tax regime will be really difficult, because unless you have really big spend on HRA and others, now mostly you will see the transition to the new tax regime, given that this is also favorable in it.
Okay. Ms. Chadha, just last one question to you before I let you go. I do know that you have a paucity of time right there. And that's as far as the announcement of the new income tax bill is concerned. Now, already these changes have been announced. What more are we expecting in the new tax bill that could be coming in next week? And then there could be further changes. What exactly could be announced? Could there be a sunset of the old tax regime completely? What are you expecting this time in the new tax regime there, new tax bill?
I think the finance minister very clearly articulated the objective is to simplify, reduce litigation, and make it easily understandable by the taxpayer and reduce the tax. She said it will be 50% of what it is today. So definitely all that will come into the new code. And also you're right, maybe directionally the old tax regime would die out, isn't it? Because anyway, everything's moving to the new tax regime. So very likely that the new regime that comes will give very directionally a future focus, very simple tax law is what she's promised today.
Okay, got that. Thank you so much, Mrs. Chadha, for being with us on this edition and helping us out, breaking it down for our viewers who benefits the most when it comes to the new tax slabs and the extension of the rebate that has now come in as an announcement from the finance minister today. Good to have you with us. We'll probably just get into the fine prints and get you back soon on Business Today in the days to follow as well. All right, viewers, we now have Pankaj Pandey, Head of Research at ICICI Direct, joining in. Also joining in is Sanjay Sinha, founder of Citrus Advisors. Warm welcome to both of you. Pankaj, coming straight to you. You must have now read through all the headlines, seen how the markets have reacted in the 2 to 3 hours of trade right after the announcement of the budget speech. What is your biggest takeaway for the markets and for investors?
Yeah, hi, good afternoon. Thanks for having me. I think this budget is all about consumption push through personal income tax benefit. And I think fiscal and all about fiscal prudence. I think given the way the government has done the capex allocation of nearly about 10% compared to the revised FY25 number, I think there is definitely a moderation in the capex, and which I think is something which is not really liked by the market. So overall, one needs to be now selective in the capital expenditure oriented stocks. And I think consumption stocks definitely are the flavor as of now. But we also need to see that this capital expenditure again has been muted largely because of the slew of elections which we have seen in the recent past. So on the lower base, I think probably the overall push or the overall allocation might not look higher, but even then our sense is that it is still a decent allocation. But definitely not the kind of one would have expected, because see, capex as a template has been the hallmark of this government for quite some time. So I think this is the first time we are seeing a bit of a change or tweaking in that template, and which is why one set of stocks or capex oriented stocks are not really doing well in the market. But having said that, we still need to see the fine print and also the comfort from the government that in case if we are able to spend these kind of a number, whether the government will be willing to accommodate further expenditure or not. I think that is where probably we need to see and wait it out for. But as of now, it is all about consumption and fiscal prudence.
It is all about consumption, and the fact that those in the incomes of above 15 lakhs or so will also be getting this benefit of a 12 lakh rupee, how should I say, non-taxable income, and that's the reason why you see many discretionary stocks also doing very well. We have the pleasure of welcoming Mr. Sanjay Sinha as well, founder for Citrus Advisors, and a very, very long-term watcher of the markets. Namaste Sinha Saab, my first question to you. I am sure this is your 35th budget in succession. Is it more?
Yeah, it would be.
Right. And I'll start with an unusual question to you. Sir, a lot of things have been done for the budget, in the budget for the state of Bihar. I'm sure you are very happy being from Dhanbad yourself.
No doubt. In fact, one thing which has been interesting in the last three budgets have been the mention of Bihar and Andhra Pradesh. And in fact, in this budget, Bihar had the unique distinction of being the only state mentioned repeatedly in the budget, and that has invited a lot of attention. Some of my friends have actually messaged that I should seriously look at relocating back to Bihar.
नहीं, आप मुंबई में ही ठीक हैं. बजट में अब कहलवा दिया दिल्ली वालों ने आपके लिए, अब इससे ज़्यादा क्या कीजिएगा. We have another common friend who's from Bihar. He was equally enthused with the mention of the state in the FM speech, and I'm sure good things are in the pipeline. It's just a matter of convenience and luck that the elections in Bihar are due. Otherwise, there was no reason for them to be mentioned. With that background in mind, Sanjay ji, tell us the hits and misses. What, according to you, the budget addressed very well, and what possibly was left unsaid?
Okay, so I guess, if I look at just the budget speech, because, I haven't had the time to go through the entire finance bill, and the devil will lie in the detail in the finance bill. So I guess in the budget speech, there are a couple of things which addresses the issues in the short term, and there are some of the issues which are being addressed in the medium to long term. I think what is being addressed in the short term is now being very widely discussed. The slowdown in urban consumption was something which was a matter of concern. And the fact that, now the tax relief has been given, most of the salaried people will be in the urban centers. So therefore, it is logically expected that this will give a fillip to consumption. I think, this may not be as simple as it looks like, because, consumption, if tax was the only reason which was holding us back from consumption, then life would have been very simple. Tax is what we pay on the margin. What normally affects my consumption capacity or my distribution of the consumption pie is actually my income itself. And therefore, that is the more material thing, and that will be a function of a couple of things as we go forward. Last year, one of the things which has impacted consumption in India is not just any other factor, but inflation. So till the time that we have mastered inflation, we may not necessarily see this tax relief flowing into consumption upswing. But having said that, we do need to acknowledge that the announcement is very bold, and therefore at least it addresses the here and now or the more immediate issue. I think what is more important that the budget is all about, and I think these are the issues that the budget addresses in the medium to long term. If there is a serious intent to build India into a manufacturing hub, then one of the things that we need to put into place is ease of doing business. I think repeatedly in the budget speech, if I go by just the speech itself, the finance minister has made a number of announcements which seem to indicate that there is a serious intent on the part of the government to make the conduct of business easier now than before. So whether that be in terms of the trust between the taxpayer and the tax authority, whether in terms of simplification of the TDS and TCS process, or the sheer announcement that the new tax code will be placed in the next week, and that will be significantly lower in terms of volume of words and chapters to deal with. I think that is more important, and therefore I feel that how is that going to be executed will be a more material test of this budget than the euphoria or the excitement that we are seeing in the consumption stocks and the stock market today.
Okay. Pankaj, I know we have to let you go, but very quickly, in 30 seconds, if you could tell us what do you expect on the Nifty now post the budget this year? Is it going to be good? Are we going to retest the previous highs? Are we going to go beyond it? Or are we going to slip from where we are?
As of today, it's a sort of a non-event, but our sense is that possibly since the capex is going to be slightly less intensive, so overall, possibly the revival in growth might sort of get delayed, and which is why, while I'll not be surprised if the market touches new high, but not the levels of 28,000 which we had predicted at the beginning of this year.
Right. With that, Pankaj, I think you would deserve a very, very big party in Delhi if we are able to reclaim even our previous high, which is 26,000. More than welcome, sir, to claim that party. Let's hope that happens fairly soon. There are a lot of discontent and pain in the market. Right. We'll take Sanjay sir's view on this. Post this budget, Sinha Saab, is there a pivot in your mind in terms of where fresh money will be allocated, or is it par for the course?
No. So therefore, there has been a significant amount of under ownership in consumption-oriented stocks, and in fact, if you look at the index performance also in calendar year 24 or even some period before that, there will definitely be some shift in the new allocation that will now go to consumption-oriented stocks. While this is going to be happening, I hope that people will also be paying attention to the valuations at which they will be picking up stocks. Therefore, I think we might see what we understand as consumption to be a little more broad-based, in the sense it will not be limited to only FMCG. It will also include autos. It will also include real estate. It will also probably include premium retail, so on and so forth. So that is one shift in the allocation that I'm going to be seeing. Second is that, in close to about 500, 600 results which have come out till now, and when we have looked at the top 1,000 stocks in terms of market capitalization, in terms of their Q3 performance, what I did was that, I divided this entire spectrum into 4 major boxes. One was consumption oriented, the second one was export oriented, third was finance, and fourth was industrial. So contrary to the way the stocks have been reacting on the market, I found that, at least the first 3 baskets, which is consumption, export, and financials, have actually done reasonably well year on year in terms of profit growth. But I guess the expectations of the market were significantly higher, and the stocks have therefore not been able to meet those expectations, and there has been some disappointment. It is in the industrial segment that is where I saw maximum pain and decline in profit. So when we go forward from here, today I see that, there could be a 2-pronged pressure on this segment of the market, industrial. One is that, the narrative is that against an increased allocation that people were expecting in the budget, the allocation to infrastructure has been retained somewhere close to where it was in the last budget at 11.2 lakh crores. And the second is that the near-term performances of these stocks and sectors have also not been doing well. So I guess there will be less interest to put money into industrial and more interest to put money in consumption, which could be a shift that I might see in the market in the near term.
Right. As good a time as any to welcome Mr. Feroz Aziz, Deputy CEO at Anand Rathi Wealth. Namaste Feroz ji, a very warm welcome. I am very, very sure that this entire tax benefit that has come in via the government in the budget, you want people to put into SIPs.
Yes, how I wish that happens. But I'm very happy if the government gets some more consumption boost rather than just the investment boost. As a industry participant, it's so exciting to say 1 lakh crore के SIP के आंकड़े बढ़ सकते हैं साल के, because 1,10,000 crore goes into pocket, पूरा पैसा आ जाए SIP में. But I think, to be fair, even if 40-50% of that came, I would be very excited.
Right. Firoz, warm welcome. Good afternoon. Sakshi this side. Tell me, what were you all expecting? And has that all come into the budget, or is there still some thing left out of the budget to be done by the government now?
I think see my expectation over the last few interactions I've had with media or with clients. One was consistency, simplicity. Let me touch upon what they've done on these two counts. Consistency, the fact that there is a direct tax code coming in. There's no capital gain tax key. Any bath is a very good thing. Second, simplicity they have already simplified TCS and TDS, which is very good. They've simplified remembering tax slabs. जिंदगी में आई हैव नॉट बीन एबल टू रिमेंबर टैक्स स्लैब्स क्योंकि बार बार बदलते रहते 5 लाख तक टैक्स फ्री फिर 5.5 लाख साढ़े नाउ दे मेड इट टू मल्टीप्लिकेशन टेबल्स 4 के टेबल में 4 8 12 16 20 24 दोज आर स्लैब्स tax rates are 5 के table 5 10 15 20 25 30 so now unless they again tweak it at least I can say confidently that मुझे याद है और कोई भी आम इंसान को याद रह सकते हैं. That's the second part of simplicity. Third, she said, I'm going to eliminate half the provisions in the next 1 week, which I think is going to be a great news. So I think simplification was done, consistency was done, rectification of different asset classes were not done.
Okay. Firoz, staying with you, in terms of fresh allocations, what would you advise existing investors who want to put in fresh money into mutual funds and new investors who are coming in, how to make their portfolios keeping this budget in mind?
I personally think if you're a fair human being, then this is advice only for fair human beings who expect the right things. If you're ready to weather the volatility of 5-7% here or there, and broader markets of about 8-10% here or there, there's a quite large likelihood that at a discount of 8% you see from September, 6 months of time correction, and an 8% broader market, Nifty correction, and a broader market correction of almost 11-12%, I would surely buy into it. Why would I buy into it? Is because the kind of capital expenditure we are seeing, 11.2 crores, 11.2 lakh crores, is a reasonable capital expenditure, and they're actually meeting it and actually spending it. And if I have to give some context to this number, because 11.2 crore, 11.2 lakh crore भी बड़ा है, 3 लाख करोड़ भी बड़ा होता है, तो इसको कॉन्टेक्स्ट में डालूं तो पहले मोदी जी के मोदी 1.0 में 12 लाख करोड़ 5 साल में कर चुके थे कैपिटल एक्सपेंडिचर. नाउ वी आर स्पीकिंग 5 साल का काम 1 साल में हो रहा है, वो भी दूसरे साल भी उतने का उतना. सो दिस विल बी द थर्ड ईयर वेयर आवर बजट इज अबव डबल डिजिट लाख करोड़. एंड कोई भी देश देख लें इस दुनिया में, they've gone into a different trajectory of becoming a developed country. It is always preceded by huge infrastructure and capital expenditure, and that's one thing which they've been steadfast on. Okay, they're spending one thing which I didn't understand, or I'm still trying to comprehend. They're trying to spend 2,33,000 crores, 211 crores on home affairs, which is a 68% growth, which is hurting me. And they're spending only 9% growth on education, which is not so. 1% growth on education and 68% growth on expenditure of home affairs is not for a country which is so young, like 29 years of average population, is not making sense.
Got that. Okay, so Firoz, tell me, post the budget, does anything change by way of investment strategies for retail investors, or should one just stay the course? You were with us, at the beginning of the new year, and you were suggesting some funds and schemes that one could look at in terms of their diversified portfolios. Is there a need to add any thematic fund? Is there a need to alter that, or put some additions looking at where the government is looking into the direction now?
Yes, Shakshi, if you recollect that day I said that the problem is not with Nifty, the broader market is skating a little on thin ice.
Yeah.
Now that broader market correction is to my mind behind us. If you dissect the broader market fall of becha kisne, right? And after some research, I figured out that becha na to FII, index fund FIIs ne nahi becha. These short-term FIIs, ARB funds, hedge funds have sold brutally. There were 38 companies where these FIIs had doubled their shareholding. They have sold it, and all of that is already emptied. That's one information I'm giving you. In my opinion, these short-term FIIs have emptied their small cap portfolio. So broader market may not be into a pain because there will be a sharp pain in a short span of time. So you don't have to worry as much as you would worry if the markets fall like this. 32.9% is the growth in earnings for the 80 companies in the mid cap space which have declared results out of 150. People are not speaking about it. 32.9%. वो 80 कंपनियों ने लास्ट ईयर सेम क्वार्टर में 77.86 रुपीस कमाया था और इस साल 103 रुपए 50 पैसे कमा चुके हैं. Of course, there are 70 more companies to declare results, but broader market fall is almost over. 8-10% falls here or there is not something which I can surely not guess. Of course, LG can, because he's always got it right.
Okay. We'll discuss this in person. I'm coming to Mumbai. I'll come and say hello to you in your office. Thank you so much, Ferozji. It's a pleasure listening to you. And in the same breath, ladies and gentlemen, we've kept the best for the last. Joining us is Mr. Tahir Badshah, President and Chief Investment Officer at Invesco Mutual Fund. Namaste, Tahir ji, and a very warm welcome to you. You are absolutely the right person to ask in terms of what the budget ticked in terms of boxes, what it missed, and what will it mean for the small cap and the mid cap space.
Sir, are you on mute by any chance?
So you'll have to unmute yourself.
I'm so sorry. So I think, most of the boxes have actually been ticked quite appropriately in my view. I think keeping the where we were in terms of the market situation as well as in terms of the economic situation, I think the budget overall at one level has delivered to my mind to the expectations of the market. This was, I have said this earlier, that this was an important budget in a good number of years. This was important because we were at a little bit of the crossroads as far as the economy was concerned, and I think this budget now starts giving a much more firmer direction. One important thing which had to be resolved was the balance between investment and consumption, and I think that has also been to a decent degree addressed. We have been having a investment-led economy, which was important, which was also very critical. But given that it was to some extent coming at the cost of low-end consumption, it was becoming a little difficult to bring that balance in. And I think this budget effectively addresses that. On the on the investment related aspects and the amount which has actually been budgeted for capital expenditure, it might probably appear that it is a little muted. In percentage terms, of course, yes, maybe we are trending a little lower compared to what we had been doing over the last couple of years, more single digit, high single digit compared to strong double digits, almost close to 20% plus in the last few years. But I think when we look at the internals of this number, I think, and not just probably public expenditure, but even every line item of public expenditure, I think the government has tried to ensure that the important segments do get the necessary allocation. Those which matter, for example, whether it be defense or whether it be things like renewable energy, probably even an allocation of more than 2,000 crores for new technologies like AI. These are keeping with the times. There may have been rationalization in few of the other areas which are probably not as important at this stage, or perhaps they have been farmed out to the private sector. For example, some parts of maybe the railway ecosystem have been farmed out to the private sector, like for example railway stations, etc. So I think to some extent the railway allocation perhaps appears a little disappointing. But at an aggregate level, I would think that many of the line items do continue to reflect the government's focus on some of the most strategic parts of the economy. That is where thematically many investors have positioned themselves, including ourselves in several of our portfolios, segments like defense and urban metros and so on. That part has actually been well taken care of. For example, even the metro allocation, I'm told, is higher by 25% compared to the previous year. So the relevant segments have been given a fair bit of allocation. And I think it strikes a good balance in the context of the fact that we've recently seen a correction in the markets. To your question about mid caps and small caps, I think I still believe that the mid cap and small cap space in general will be quite vibrant in India over the next few years, given the fact that we expect the domestic economy to be reasonably strong, and with the possibility that it might even accelerate as we go along. Mid-size and small-size companies typically are the biggest beneficiaries of a strong, resilient domestic economy, and I think that then becomes an interesting space to invest in, and especially in the background of the correction which has happened. I heard Feroz ji call out a few numbers with regard to the performance of some of the mid and small cap companies, and I think that's quite fair. And there have been, of course, expectations which are also reasonably right up there, and to some extent that would have created a little bit of disappointment. But I generally feel that these will be the areas where you will get growth which is well ahead of system rate of growth, and typically if you get some of these punchy corrections in the market, especially in the mid and small cap space, of course you can't put all of the money to work, but can you put some part of the money to work? Definitely yes, and I would do so in such circumstances, because these kind of dips in the market do um, boost your aggregate returns, especially when you sit out 3 years from now or 5 years from now. You'll be happy to have done some of those allocations in such times.
Right. Mr. Pasha, just 1 minute to go before the markets shut shop on budget day. I just wanted to take one view of yours, and that's on should the retail investors change their investment strategy post the budget? Should they stay the course? What exactly would you recommend is needed to be done on the markets now? Because we've seen, the initial reaction on the positive side. We digested it, and it was being seen that last 5 days of a rally was only a hope rally or a relief rally, and that's things are back to 23,400, 23,500 band. How would you really expect the retail investors to go about it now?
Well, my simple, premise for this calendar year is that you are probably going to see a decent amount of volatility in the first half of this calendar year, perhaps running up until May, June, budget notwithstanding. While I'm reasonably happy with the budget outcome, I would like to say, as I said, but I would like to think that this year first half will be relatively challenging, and returns will be relatively more back-ended. So second half will be relatively better. Much of the global volatility will also probably, because of global circumstances and a few of those things which are also at play. I think that will settle down during the course of the next few months, and markets will then start looking at some acceleration in the economy, by which time we would have probably seen a time correction, and maybe even the earnings base would have actually start becoming favorable for growth to once again accelerate. So I am looking at a back-ended return profile, which from the small investor point of view, it basically implies that you should actually start investing in during this next 4-5 months. The market might stay sideways. You might get some modest absolute correction as well from here. I think the big leg of the correction probably in the market, to my mind, is over. You might still get a smaller correction from here on, but in that phase, you have to utilize to make your investments, your product choices, your SIP plans, etc., in place, so that you subsequently end up with returns in the second half of 25 and going into calendar year 26 as well.
Right. I think that will also be the time, the second half of 2026, when this liquidity injection by the RBI a fortnight ago, and of course the benefits of the budget will start converting themselves from an economic push towards an earnings push. That is something that a lot of other analysts have also said. Mr. Bacha, one thing we wanted to understand was your view on a potential rate cut. Given the fact that the currency itself is depreciating, do you think the RBI has some legroom to cut borrowing costs? Would that be an icing on the cake?
Definitely, and I believe that while I understand that the challenges around getting that trinity right between growth, inflation, currency, etc. But I think at this stage, what is important is to actually restore the confidence in growth as far as the economy is concerned, and to some extent, I think looking at both the liquidity measures which have been undertaken by the RBI in the last week or so, and then now looking at the budget, I think that there seems to be a certain amount of coordination between government as well as the central bank in order to ensure that we get better monetary as well as a fiscal policy. I think this budget loosens up a little bit in terms of allowing for better growth and a more balanced growth, and RBI's liquidity measures also allow the overall monetary system to also loosen up a little bit, and that I think will be good from a growth standpoint. Some part of the currency challenge, in my view, will revert once, like as I said, as we see some of the global issues settle down. The new US administration is going to be on their policy drive for the next 2-3 months, and that will perhaps pull up the dollar and at the cost of some of the other currencies around the world, including emerging markets like India. But that is exactly what I expect will probably reverse as we get into the second half of the year. Flows start improving, and then the whole cycle that we are going through right now probably reverses. The dollar probably settles down a little bit on the lower end. Rupee stabilizes, domestic liquidity conditions improve, and foreign flows also then potentially return in the second half of the year. So that is a script which I think the market will probably follow in the coming weeks, and that will then open up the room for RBI to even cut rates. So I think we still remain in the hunt for RBI to start, at least going down towards a shallow rate cycle or rate decline, perhaps beginning, let's say, in the next 2-3 months.
All right, Mr. Barsha, thank you so much for being with us then on
Thank
this edition and sharing your views with us on the budget day. Hoping to have you soon once the fine print is out and we get to see more details coming out of the document today.
Thank you.
Thank you so much. Appreciate
Thank
your
you for having
time.
me.
The markets have shut shop, viewers. 26 points lower on the Nifty, 23,482 right there on the Nifty. What's shot up and celebrated the budget is the real estate space, 3.3% higher. Top moving sector. You also have the FMCG index up 3%, consumer durables up 3%. It's the tax bonanza and the government's push towards consumption that has lifted all these stocks and sectors higher in trade. Even the autos are up by almost 2% odd. Some gains coming in on the small caps today. What's fallen back and is on the back foot are those which were so far outperforming: IT, metals, you have the pharma stocks, banks, financials. These have been slightly on the back foot, but probably these will be the sectors to watch out for when 7th of February the RBI comes out with the monetary policy. Share.
Ladies and gentlemen, let's look at the outperformers today, and you will notice a clear trend towards spending, which is consumption. The top gainer on the NSE 500 is brown goods major Blue Star. So get ready for ACs, get ready for fridges, get ready for washing machines. This is where the disposable income, because of the removal of the tax slab, will come in. Followed by DMart, 10% higher. When was the last time we saw DMart rising 10%? Well, that's the consumption theme playing out for you. Liquor company Radico, followed by United Spirits. All food players are up. Look at Sapphire, look at Devyani, look at Sakshi, Phoenix Mills, spending place.
Yes, absolutely.
Malls. So
Malls.
Phoenix Mills is 7.5% higher, 1764. Westlife, again spending. Campus footwear, there is a special mention for shoes in the budget. We'll focus on that, and of course the entire staple space, which is Hindustan Unilever, Colgate Palmolive, Nestle, you have Britannia, you have Dabur, you have Marico. This is where the initial part of very basic expense goes. Then you have discretionary. Look at Trent, look at Aditya Birla Fashion Retail, look at how stocks in the semi-luxury real estate space have moved. Those who make medium-sized housing, look at Anantraj. Look at how low the developers have moved. These are mid-sized builders. They don't do the top end. Of course, they make a lot of luxury projects, but that's not much of a contributor to their top line and the bottom line. So clearly, the budget has chosen to move towards consumption. And Sakshi, one more important point that the budget has made is telling corporate India that we've put money in the hands of the spending class. Now it is for you to pick up the baton and start capex. Will that happen or not happen? Only time will tell. But so far, the reaction of the Nifty to the budget has been a sign of maturity. perhaps, just perhaps, you might see the worst behind us, but then markets are dynamic, markets are volatile. Let's hope for the best and plan for the worst.
Absolutely, Shall. I think the biggest task has been delivered. That was the biggest task, that you deliver on tax cuts, and that has been delivered. Remember, we were discussing how 100 crore rupees houses have been off the shelf in just a day, but it's the PMAY scheme that has not taken off. So I think that's the strata that the government has clearly focused on, and probably that will move the needle for the economy. Let's hope for the best. And we'll wind it up at that. Thank you so much. Yeah.
Aaj sham ko you have to go and spend.
You
Go
to
to a
go and
restaurant.
spend. Celebrate.
You know, Friday evening went by, it's Saturday evening.
Yeah.
Please prove Shankar Sharma wrong, go to a bar. United Spirits, Radico, Piccadilly, everything is up.
Additional money.
है ना?
You go into
Eat
parties.
out, Devyani International, Swiggy, Zomato, कुछ कीजिए. फाइनेंस मिनिस्टर ने कर दिया जो उनके हाथ में था. अब आपके हाथ में पैसा है.
अब इकोनॉमी को चलाइए. All right, viewers, thank you so much. It's been a pleasure covering the budget day for you with various top market experts, economists at large who've been guiding you through this day. Thank you so much, but do stay tuned. The action is not over. It's in fact just beginning. We're going to be seeing action from the CII in the evening, and of course, we will be getting secretaries of finance, those which have been part of budget making exercise today, helping you understand why they chose to do what they did and what is the impact that they expect all through the evening. So you are right in the middle of the budget action. Stay tuned. Don't go away.